Good afternoon, everybody. Thanks very much for joining us here in what is the final session of day one. And we're going to be looking at alternatives. In this particular case, an alternative to drinks, but drinks will be served immediately after this. So there will be a rather fabulous reward to all of us. Really fascinating topic. For those who don't know me, my name's Richard Betts. I'm the publisher, but also head of content at Real Asset Media, and as well as running kind of 60, 70 of these events a year, and running the International Investors Lounge here, we produce Real Asset Impact, which is focused on ESG, social impact strategies, purpose-driven investment, as well as Real Asset Insight, which looks at, I guess, across all of the sectors and the geographies, but is looking more at the sort of research, analysis, strategies, the things that are going to be driving the market going forward rather than the deal that happened yesterday. So that is me. Let's start with some introductions, and we'll work from this down way forward. So Ron, let's start with you. Quick introduction.
Yeah, great. My pleasure to join this panel. My name is Ron van Blois. I'm the founder and chair of the Senior Housing and Healthcare Association. I'm very driven by this asset class, which is a question whether it's still an alternative, but okay. And it's also one who is outperforming on ESG. So I think that's very interesting to share some thoughts about it.
Great. Alvaro.
So my name is Álvaro Otero. I'm head of real estate and construction at CMS Spain, and I am driven by my clients. And my clients express every time more interest in this alternative sector, which comes from senior living, if it is an alternative, to parking or other asset classes that we can discuss later.
Great, thank you. Stephen.
Yeah, my name's Stephen Miles. I'm head of strategic capital partnerships at Schroders Capital. Schroders is a 800 billion AUM FTSE 100 company. Schroders Capital is the real assets business within Schroders, and that's about 10% of the total AUM, and we're heavily invested in the alternative sectors, I guess sort of anchored through sort of 3 billion euros worth of hotels that we own, and I guess that dovetails into the sort of the increasing hotelification of real estate, and certainly around the services that are provided through the alternative sectors.
Great, thank you. Bas.
My name is Bas Magielse. I'm head of parking and mobility with Primevest Capital Partners. It's a boutique investment manager serving mainly German institutional clients. Primevest invests in residential communication infrastructure, and as my own department invests in parking and mobility. We have a portfolio of roughly 1 billion assets under management, 55 car parks, all scattered across Europe. It's like we call it the rough diamond. Some people don't like car parks, but we like them very much. We have experience with investing in them since 2005, and they have been proving to be very crisis-proof investments, providing very solid income returns, even in the crisis 2007, 2008. Also during Corona, of course, the car park operators suffered, but they have all paid basically their rents, and we see now trading is going back to highest levels since ever again. So a really rock solid investment, as we call it.
Great, thanks very much. And welcome also to everybody who's joining the session as part of the on-demand series of programs that we've got here live from EXPO Real 2023. Let's pick up on the institutional capital demand for these sectors. I mean, if I look at things like the PwC ULI Trends report, each year alternatives, whether that's in the living sector or data centers or whatever it might be, have been rising up the ranks in terms of investor intentions. But how are we seeing that translated into actual capital? Are we seeing increasingly capital being allocated to this market, or at least being planned to be allocated to this market? What's your sense of that, starting with you, Stephen?
My view on it?
Oh, yours, Bas?
That's sorry, yeah. I think what we have seen, we started already quite some years ago in 2005, basically as the first real dedicated investor in car parks. And in the years after that, a lot of copycats basically followed into the market and are still looking for opportunities. Of course, despite the market environment is different, but you also see some other investors now coming on board. So we have the German more long-term, stable income investors. But we also see now some value-add investors coming in, buying car park portfolios, for instance, in the UK, which they really want to enhance and transform into hubs with EV and all those kinds of things. So you see it growing, and also new investors coming on board as well. Yeah.
Okay, good. And Stephen, what's your perspective on it?
Yeah, no, I think that there is those sentiment surveys are accurate in the sort of the anecdotal, sort of conversations we're having. There's definitely more capital coming to the alternative sectors. And we're calling them alternative still. I mean, it's really around the operational assets and operating assets. I think there's a bit of push and pull. I think that people are attracted by the underlying income and the revenue that you can generate through those assets. And I think there is and the sort of the push factor is really the reluctance today, or the sort of the on balance view today, that a lot of people are probably where they want to be in terms of offices, if not slightly overweight. So you're getting a rotation of capital away from, what has historically been the largest part of the investable universe year on year in terms of the investment volumes. So there's capital sort of moving away, and then I also think that sentiment today is that people are really looking for income, and they like the income that you can generate from these operating assets.
That's correct.
Okay, good. And it would be interesting just to pick up with you, Ron, looking at the senior living side and the healthcare side. I guess, what are the key drivers in terms of that market? What's driving that forward? And I suppose, what are some of the challenges as well there?
Yeah, well, I think the asset class is really driven by the aging demographics. So, and that's also on the pan-European level. We are all suffering from aging demographics, where we, by 2040, we will have 25% is 65 years and older. So that's quite a challenge. And also, when you look at the existing stock, we don't have a sufficient senior living product. And that's one key driver, that we have to create a market. And of course, we should be aware that we're not talking about one market. It's quite a spread of sub-asset classes. So also, I'm also associate professor at Amsterdam School of Real Estate. And it's important to understand that it's actually a range, where it starts with independent living, what we call senior living. Then we're heading to assisted living, and ultimately it's long-term care nursing home. But that's a totally different operational real estate. Yeah. And I think when you look at the current market, there is more and more focus on the senior living side, which is almost a residential product. And that's fairly interesting also when you look at the appetite of capital, that the resi market is actually shifting to the seniors, or what we call the older adults. So and when you look at this market, the potential is huge. And for example, Poland, it's not 25%, but the aging demographics will hit 40% of the total population. So also in terms of making impact, yeah, it's, to my opinion, the most impactful asset class you can get. And what's interesting is we started roughly 40, 50 years ago in the US with the REITs. I think 30 years ago, the Belgians started with REITs like Finimo, Idifica. And also nowadays, pension funds, insurance companies, they have a big appetite in this asset class, because when you're trying to create an investment portfolio with also outperformance on social impact, well, this asset class ticks all the boxes. And in terms of challenges, that was your question, it's knowledge intensive. And that's also what I like, because in general, it's not a financial product. So you need to get insights not only of the propco, but also the opco side. And I think that's also where the shift is between more financial driven investment managers versus operational investment managers. It's a different story. So that's, I think, why I love this asset class, and also why a lot of parties are keen, and also we're getting more and more benchmark. So it's booming at the moment.
And Alvaro, it'd be interesting, to get a perspective, particularly from the sort of Iberian markets there, in terms of how those are developing, and also how easy it is, for example, for the slightly more niche alternative sectors to get financing. Obviously, you have, what may or may not be an alternative in terms of hotels, leisure, and various forms of that. But what's the perspective in terms of, I guess, financing those assets and the opportunities there?
Okay, in terms of financing, I think that it's always the same story, but it has been proven a success story at the end of the day. So we were in a co-living, quite big co-living premises in Spain, and the banks there said, we are finding problems in educating our committee because the first question is, if this is not a co-living premises, can we convert this to residential? But the same people said, this was also the same question for student housing, and now it's a perfectly bankable asset. So I think that, of course, financing entities need to be educated, and that this is a sector or sectors that are coming to stay. And in the Iberian market, we are seeing this, and as Ron was pointing out, this is a niche that are actually driven by demand. So we need senior housing. We need student housing. We need all sorts of alternative properties, which is true. It's really knowledge and operating intensive. And one of the challenges also is to get to know an actually institutional operating company that can accompany these financial investors. But again, it's here to stay, and it's booming in the Iberian market too, as in the rest of Europe.
Okay, good. Bas, it would be interesting just to pick up from you. I mean, parking has kind of moved almost into, everybody was saying, well, there's going to be electric cars, so parking is going to completely change. And then parking became an element of the solution to greening the city in some ways, and was part of mobility. So it's been interesting to track that. But what are the drivers for it at the moment in terms of the growth of the sector that you're seeing?
Mm-hmm. Yeah, what is clear is if you look at the number of cars, people say that we should change and that we should have car sharing. But actually, if you look at the numbers of cars in Europe, not absolutely it's growing, but also relatively, the number of cars per capita is growing. So somehow the trend is not coming in that we have less cars. There might be some changes, of course, going forward, because there is a huge pressure. But we also see is that the urbanization continues and continues. So the pressure on the inner city and the infrastructure in the inner city is only growing. So what we strongly believe is that car parks are basically facilitators to make the city more livable. You rather say, I think it's an illusion to say that the car will be banned from the cities at all. So you will get car-free zones, etc. But it's more a matter like hiding the car. Where can we put it? Where can we go and put it on the right location? People need to be there. People, if you don't have the possibility to go to public transport to the city, you have to be able to go to the city. The cities are, we always call them the motors of all economies, because everything is happening there. People are eating there, living there, working there. So that's why it keeps on driving, and we are sure, of course it comes down to asset selection, where the areas will be really pedestrianized. There might be room for redevelopment into other functions, but really on the outskirts or the ring roads around the cities, we believe that there will be a strong continuous demand to park your car. Other than that, car parks can also facilitate the EV transition, because they are by purpose, by nature, just the location to build EV chargers. So that's what you already see, what's happening across Europe, and they don't have to be 100% EV chargers, but at least you can see them as some kind of a fuel stations of the future. So that's the biggest demand, we say. Continued urbanization, pressure on the streets, the need to get the car, give the street back basically to the pedestrians, so hide the car, and that's all supported, of course, by also the municipalities, which are going to make cars, get them off the street and try to get them in car parks. Stronger enforcement, which is all positive, I think, for the livability of the city, and this also provides the future-proofness of car parks. Yep.
And it's interesting that growing crossover there between, the real estate side and also the infrastructure side with, with that rechargeable energy, especially as electric cars come
Correct.
more through the system. Stephen, it'd be interesting just to pick up with you. You mentioned that Schroders Capital is investing in a lot of these, what would be maybe viewed as operational or alternative sectors. So what are the ones that you're looking at? I mean, are you looking at data centers? Are you looking at self-storage? I guess, what are the ones that you're looking at, and where are you seeing the most opportunities at the moment?
Well, the short answer to that is we're looking across the spectrum.
It's a good job I didn't mention all of them.
No, exactly. That could have taken you a while. I think there's some argument as to whether data centers are really sort of in there. I mean, a lot of the data centers are managed by the big operators anyway, and it's not a big part of the market, I would say. No, I think all the living, student, senior, service. We have a big hotel business, as I said, and that again is, we operate and manage those hotels, and that gives us a skill set I think a lot of managers that don't have in-house. Self-storage is an interesting one. I think that again it's around some of the movements. There are certain drivers to that market that make it really interesting, and it's not that easy to get in at scale. So making that efficient is an interesting journey, but we're working hard on that. So look, we like anything that has a variable income that we can drive top line and control the costs on the bottom line, and that's really, it takes a particular skill set, and I think not every manager has that.
And in general, is it more challenging in terms of finding these assets? Because obviously it's more simple in a way. There are a lot of offices, there are a lot of retail, there's a lot of, but actually you've maybe got to get more granular here.
The challenge is finding the scale to A, make it interesting from an investment perspective, but B, to drive efficiencies that come with scale. And I think in a lot of those sectors, certainly around the living and the senior living, you're still really, to have the institutional quality asset at the end, you're having to build and develop that and create that product. And I think that's something that has advanced a lot. But I think on the senior living side, it's also sort of educating the customers too about having the right type of home for later life. And I think, so when you look back and you look for all the data about how deep the market could be, it doesn't necessarily exist. So you're looking at the macro tailwinds, and you're extrapolating and really kind of thinking about how, if you create the right product with the right amenities and the right level of amenitization, are you sort of self-creating and self-generating that market? And that's something that the market is going through. So it is difficult to get scale, and you have to sometimes go and be an innovator and first mover and develop that.
And of course, Ron, as well, picking up on that point, Europe is moving at different speeds as well. So, we've obviously got, you mentioned there, the REITs out of Belgium, senior living, big focus on that in the UK, for example, slightly different models in France. But I suppose, what are you seeing? Because also you were recently in CEE, looking at those areas. So it might be interesting just to share that perspective as well.
Yeah, and also maybe contributing to Steven's part, I think one driver for investors to go in those alternatives is also diversification.
Yeah.
Because when you look at the fundamentals of especially long-term care, and I'm a little bit of a nerd, so when I look at the correlation figures, the correlation between this asset class, like offices, is non-political involved. So when you look at the behavior of this asset class, it has a different cycle. But I fully agree regarding your question, the differentiation between countries and also what is the maturity of a market. There's a big difference between Benelux, UK, Germany. Also when you look at yield compression, at Germany, like an extremely mature market, And also when you look at a booming market from a aging demographic perspective, Poland, but there's no deal flow yet. So it's all about timing. And that's also, I think, where the color of capital will be different. Because there's always a first mover with a little bit of a different yield perspective, risk yield perspective. So like the CEE, as a total, can generate skill. But when you're going to Hungary, there's no skill for an institutional investor. And also when you look at the political environment, there are still questions about, okay, how is the financing scope of a healthcare market? So that's also the reason when you look at, from an investment point of view, it's quite research intensive. And you always need locals on the ground. And that's for sure my opinion, that it's a difference when you have a legislation. For example, in Germany, you have even regional legislation. So it's quite, even for Germans, difficult to be successful in all those regional markets with regional legislation. And that's important to understand. So I think I fully agree with Steven. The potential is huge, but it's indeed a little bit of cherry picking and timing. And therefore I think we need thought leadership, and therefore it's also important to have this type of conversations where we can learn from each other, and also try to have a realistic risk-return discussion. So something where what you don't know, so then you're not able to backcast. It's only forecasting. So it takes a different skill set, and that's also when I look at capital. For example, pension funds, in general, they are like sheep following each other. So entering a new market, entering a new asset class, that's fairly difficult. So it's always. That's why we need. Also that's why I founded the SHA. Because we need benchmark, we need unbiased data. Do you agree?
I think you need. I think the market needs educating, and I think those first steps. It may well be that you do need some of the private equity style money coming in to start the ball rolling. But if you, I agree with you, Ron. I think if you look at the income fundamentals, it's very, very, very attractive to the core capital. But the core capital and the institutional capital that is liability matching, where this income is very, very correlated to that, doesn't necessarily want to be the first mover in a market. And look, I think it's up to the big managers and the big institutions to bring that top-down institutional rigor to a local market knowledge, and that I think will feed into this ongoing education process, and I think help the capital realize that the risk is being managed in the right way.
Okay, good. I'm going to come to you in a second, Baz, on that as well, but I wanted to just pick up with you, Alvaro. We mentioned a little bit about CE markets, and in terms of the Iberian markets, in general, is regulation supportive of these areas? Maybe because there's a social element to it. I mean, you mentioned the senior living side, student housing side. Is regulation generally supportive, both from a kind of city leadership, but also, governmental?
Mostly, yes. It depends, of course, of the asset class. So senior housing for sure, student housing too. Parking, for example, is a challenge in Spain. I can't speak for Portugal, but in Spain it's quite a challenge because it's concessions or a public owned land typically, rather than privately owned land, which is a hurdle for some institutional investors. So they are working on it. They are working municipalities on public to private collaboration schemes, but again in parking there is still a challenge to overcome. But of course, the interest is there, and on the other hand, the need of parking, of car parks, is absolutely evident. So I think all big cities in Spain, you can only access the center if you are going to park your vehicle in a parking. You cannot park it in the street, as Bas was pointing out. So I think what we are going there too.
Okay, good. And Baz, it'd be interesting to pick up What are your investors? Is there an element of education as well if you're extending the fund or you're reaching out to new investors where they've got to try to understand the market, and especially the sort of social element of that, the social value side, which probably is not the thing they immediately think, like Alvaro was mentioning, when it comes to parking?
Yeah, typically it often starts with a lot of questions. Why parking? So that's right. So it comes down to a lot of education, and maybe also just to add to Alvaro, I think what is also this concession structure. What it really shows is that it's very much infrastructure-like, because those cities want to keep control somehow over those sites, because these are vital for the city, and thus they have been given in a concession. So it could be challenging for some German investors, but that's more a legal issue. But that's also why we see it much more as this infrastructure element rather than real estate. It's somewhere in the middle. And yes, it comes down to explaining how you do your asset selection, how do you do your location selection. I think, as Steven said, also how do you assess the underlying income, the alternatives to improve income. A lot of people saying, why are those car parks being changed into hubs, and why do they get additional functions? Is it because it's not going well? It's rather the opposite. It's basically more optimizing and building out the business model. There is always some space left in a car park, so why can we not find other functions? And also these functions again support the city. So basically maybe some last mile solutions in a car park with a pickup box, etc. All basically focused on reducing traffic movements in the city, and that's the key thing. It's all about traffic movements.
Do you also see, because I think valuation is extremely important, when you take the ESG, let's call it framework, I think it's fairly important to also measure on the ESG like a parking solution where it ticks also a box of governance. And when you look at the city level with area development, or when we can optimize it and we can create affordable housing, do you also see it on the environmental, that you can evaluate a parking garage based on the ESG parameters?
And we are on the big ESG journey. So 2 weeks ago we had a big ESG workshop internally, also to define our strategy. So that's the key thing. The main challenge here is the size of the asset class. I think what you say, you need to get some size in order to be able to get benchmarks in place. There are no benchmarks. So we basically have to be very inventive, and basically have to set up our own benchmarks and see how we can cooperate. And here it comes down in the tenant engagement, operator engagement, where you basically have to work together with those operators. So like the bigger operators like Q-Park, Opcoa, Indigo in France, they also all subject to CSRD, so they also have to work on the on ESG measures. So it really comes to the big partnerships over there, and that's basically, I think I can say, for the sector that we have to do much more in that respect.
Yeah, but the same is in our asset class. When I look at the Senior Housing and Healthcare Association, we're trying also to educate the valuators, or at least have a conversation about also how do we measure social impact and how do we see it back in the valuation, because otherwise we're not going to spend €1 when you don't see it back in valuation, and it's still too unknown. I think the first proof is already on the E, like resi, where you see being compliant, yes or no, it can make a difference on 20 to 40% in your valuation. Well, that's going to be a game changer if we're going to do the same with senior living and healthcare or parking.
You have to,
Do you also see it? I don't want to take your moderation, but I think this is
too late.
Yeah, this could be the key driver.
I think the impact in the valuation is coming through the fact that the market is bifurcating, and you're either on that ESG agenda and you're hitting those metrics and you're core, or you're not. And I think on the social side, that's a harder thing to reflect in a valuation, other than you kind of, I guess, hope that and believe that if you're hitting not just environmental but also social targets, your buyer universe becomes larger, and that creates pricing potential and ability that way. So, I think that's how it gets reflected, Ron, rather than metric one adding X number of basis points to a all risk yield, or a discount rate. So, I think it's currently looked at that way. It might well be that there is a checklist and there is a sort of decreasing yield profile that reflects that. But I think it's coming through in the fact today that the core capital is looking for assets that hit that agenda, and therefore your values are able to reflect that, because core capital is the most, well, everybody wants to sell to core capital, whether you're core yourself or your value add or opportunistic in creating it, right? So I think it is reflected, but almost implicitly rather than explicitly.
And do we think that actually a lot of these alternative operating businesses, however we want to talk about them, are more resilient to the current challenges in the market, and so actually therefore their values should be a little bit more resilient as well?
I mean, I think that what we're seeing is that valuers are adopting more DCF-based approach to some of these operating assets. And that, in the end, is because everything is more explicit, it is reflecting a more accurate number at the end. I also think with operating assets, you tend to not necessarily have binary lease events. And I think that, everybody's dream 10 years ago was to build their building or redevelop or refurbish and let for a 10-year lease to a good tenant. I'm not sure that today is really that smart. I think that you want to be having revenue streams that are not binary in outcome at a certain point in time.
Or at least affordable, because I think in the end it's about affordability. So when the starting point is not right, and when you have a CPI index and it hits the 14%, you're having a problem. That was, of course, the market practice of the last year. So.
And we've only got 1 minute left, so I'm going to ask a question, which is, we're all a bit uncertain whether we should be calling this an alternative investment opportunities discussion. So next year, when we hold the same session, what should we call it? What will it be called? How do we, what will we start calling this? Because I think it will make it more attractive as well if it's called something different.
For me, it's operational real estate.
Operational real estate?
Yeah, hidden gems in the operational real estate sector. Huh?
Okay, operational real estate, are we all happy with that?
And outperforming on impact, so something with impact.
And that's quite, the social impact side of these assets are, I think they are overwhelmed if you compare to traditional office or whatever. So if even parking, if you can educate people and make a good storytelling of which is the social impact, that's huge for these assets.
Okay, excellent. So operational real estate is what we will call this session next time, and we will put it in alongside when we're doing content around impact as well. So very good. Okay, I look forward to that next year. Thanks very much for joining us. Thanks very much for also watching this on demand.